All right, so I guess we are live now. Let me know if I'm audible or not in the chat. Audible, all right, cool. Give me 2 minutes actually. Give me 2 minutes. I'll just share it on my Instagram as well. Meanwhile, you can put your doubts in the chat. I'll check those out. All right, so let's start with your doubts. But I'm not live. I think I'm live now. Right. Cool. So let's start with the doubts now. USD INR, I'll check that out. Tata Motors, if it contracts. Tata Motors, see in FNO stocks, what you want to do is you want to play with the sectoral index. So don't chase momentum in the FNO space. What you want to do here is, um, let's see, just a second. In the FNO space, you don't want to chase any momentum. All right. What you want to do is, because in FNO stocks, especially the most liquid ones like Tata Motors, if I pull up Tata Motors, they have a lot of weightage in their respective indices, right? So what they'll tend to do is they will tend to always return back to demand and not run up straight unless the entire market is running up like this. They will do that. All right. So in the FNO space, what you want to do is you want to keep a view about the sector itself, right? The entire sector. So if you see something like reality, just a second. Right. So if you see something like reality, you see it has come down to the weekly demand zone. So now it's a good time to buy strong reality stocks. All right. So it's better if you start taking sectoral views in the entire FNO basket instead of trying to trade individual stocks when they contract, because they are heavily dependent on what sector is moving up and what sector is going down. So if you see in the media as well, very nice weekly chart. We might see some up move. Just wait for this supply to be cleared out, and then you'll definitely see some bit of up move in the media space as well. All right. So in the FNO space, wait for your sectors to set up, and then try to get into stocks. So Tata Motors is good. Auto sector is at a supply right now, right? So keep a view on the auto sector as well. You see, this entire area is your area of supply. So another mistake which a lot of people will do is would do is they'll mark this as the supply. This is not the supply, all right? This is not the original supply. This one right here is the original supply, and actually this is the original supply. But in this leg, in this up move, this is the original supply. Or every other supply is actually reacting from this area itself. So mark the highest supply, all right, this one right here. Do not mark any intermediate supply, because again, if it starts to go up here and then you see that the supply is getting taken out, then it falls back. So you will think that this is not working out, right? So Mark the highest supply zone and mark the demand zone from which it is reacting. All right, you don't have to guesswork the demand zone. That is the entire point. You can use a 50 EMA as well, but mark the demand zone from which it is reacting. And now you can plan your trades whenever it comes down to these lows. You can look at some intraday charts and then start buying small sizes. So if I pull up Tata Motors, see Tata Motors Nifty Auto was at a demand zone right here, all right, and Tata Motors was at this demand right here. This entire structure, I mean, mostly this demand broke through this previous supply, all right. So this was the demand at which Tata Motors was at, right, and Nifty Auto was also there. So Tata Motors, if you're waiting for this demand, then there's a chance that it might not come, all right, because Nifty Auto might start moving up before that. So Tata Motors will pick up from there itself. So you buy these intraday breakouts, all right. You buy these intraday breakouts whenever the stock is coming around the demand zone, and keep building positions in stronger stocks. If this demand starts to go, the auto sector will also start to break down, and then you can exit accordingly. All right. So don't buy extended structures, right? That this is the only mistake which we did in Apollo, yeah, Ashok Leyland, right? The demand was right here. The demand was right here, but I bought somewhere here, all right, and then I exited on this day, which was day before yesterday. But the position size was small because the market was extended, so that thing managed my position. But the point is, if you know that the market is extended and it's about to fall down, when you're seeing clearly that things are trying to break down, you should always try to wait for demand zones. All right. Hindi bol live छोड़ दे. All right. Gold is, I mean, दूसरे लाइफ में चला जा भाई. Had to get a little position because of the fall. Add back if it stabilizes at demand. All right. Right. So you should be cutting everything. I mean, why are you still holding it? All right. You should be exiting when this demand starts to go. So I don't see the point. This thing moves up and down in a straight line. All right. So once this, and anyway, if you're entering, your entry was somewhere here, if I remember correctly, and maybe your stop was below this low. So you're already making something like you're already making something like 1:8, 1:9. So you should exit. You should start booking out those gains. Don't wait for a multi-year bull run in um, every kind of move. All right. Wait for. I mean, if you're getting 1:8, 1:9, I would have definitely exited. And there's a lot of supply here. You see this range right here. So there's a lot of supply here, right? So this zone is a supply area. So you should have exited there. All right. Views on gold. So gold, last time we talked about gold, I talked about this being bullish from here on, right? This one worked out well. You see, this was the demand we were talking about. So I clearly mentioned not to take this demand zone, and I talked about this demand right here, right? Basically, this entire structure, right? There was a nice little contraction right here. There is a lower time frame supply, and then there was a good up move in gold. So right now, gold there is nothing really. All right, what you want to do in gold is you want to wait for these lows if you want to buy more. All right, so don't do anything here. All right, I would suggest not to do anything here. This is your supply in gold. All right, and this is your major supply right here, this entire base. So what you want to do here is wait for at least these lows to get tested, because right now we are moving up in a straight line. So the entry was right here, and we've talked about it. Another nice entry was in nickel. I think I missed out on this one, but this was setting up really nicely around this zone, which is again the zone which made the last high. All right. So this was the last high right here, and this was your zone. So I missed this one. I was actually trading nickel in this area, right? I caught some of this, and then when it started to come down here, I ignored it completely and I started trading the markets, the equity markets. But then later it broke out. So that was bad luck. But yeah, whatever that was. So keep an eye on these commodities, because once they start running, they'll give they'll give big moves. All right. If you see natural gas, again this supply right here. All right, I'll just take here. So again this supply, and there is no demand as such. Probably some weekly zone, right? But still in a downtrend, natural gas. These zones are holding, but I don't think this one really means anything to this chart, because your entire bias is coming from this supply. All right. So keep an eye on commodities. When they start trending, they'll give moves like this. All right. You don't want to miss out on them if you trade futures and options. Commodities are a great tool. and crude as well came down to this zone right here, and then a nice bit of up move. It's still continuing, right? It's actually holding all these little daily demand zones as well. If you see here, so of course we'll see some correction someday, but this is your area of importance, the last daily demand. So crude is trending very nicely. All right. So let's talk about the market as well. So yesterday we clearly discussed that the bias was bullish. You can watch yesterday's live if you were there. So my view was in right. My bad. There is some issue with the. Right, give me 1 second. I'll just push this a bit. All right, cool. So we should be all right now. There was a lag in OBS. All right, cool. So yesterday we